Many analysts believe the U.S. economy is heading into complete destruction, that we'll see devaluation on the dollar like we've never seen before, and that our mounting debt is going to push us into a complete collapse. Brent Johnson believes that, hey, if the U.S. is going to collapse, everyone else will before, because he believes that our dollar is the strongest in fiat currency. Brent is a wealth manager. He owns a company called Santiago Capital that is in Puerto Rico, and he's also the developer of the dollar milkshake theory. I hope you enjoy the show. Brent, thanks so much for being on the show remotely this time. I wish I were back sitting face to face with you in Puerto Rico.
Yeah, thanks for having me back. Enjoyed talking to you last time and have been looking forward to this for the last few weeks.
You're a money manager, and many money managers or certified planners or financial analysts believe that we're in for some type of massive stock correction. Others still say that there's growth in the markets. I've heard you say that yourself, that you think that things could go up. With the markets at their highest levels ever, really, what do you think is more likely to happen to the stock market?
Yeah, so it all depends on the time frame of which you're talking about. And so, I am of the belief that markets are going to go much higher. I'm of the belief that U.S. equity markets are going to go much higher over the next, call it 3 to 5 years. Having said that, though, I think over the next 3 to 5 months, it's highly likely that they have a correction, and it could be a fairly strong correction. Now, if that happens, and I don't know if it will, but if that happens, as of right now, I think that is probably a dip that you buy because I do think U.S. equities are going to go higher over the next few years. But I reserve the right to change my mind on that because it all depends on it. Well, number one, if it even happens, and number two, why it happens, and then number three, what kind of reaction the monetary authorities and the governments take to that action. So, I guess I'm certainly I don't consider myself a perma bear. I do think we're going to have kind of these rolling crises over the next several years. But I think the U.S. actually hangs in fairly well compared to the rest of the world when that happens. So, I guess I kind of have a little bit of a nuanced view here.
With the prices where they are right now, no offense to you, but, personally, I think that the stock market is this gambling game where it seems like the rich get rich off of those who lose. And, Brent, I have to be honest, I've never really done well in the stock market. But how does it make sense for people to, I hear what you're saying, that there is room to go up. Obviously, look at the run that we've been having, quickly corrected after, we had the inflation report come out from January, the CPI, and then all of a sudden they had a bad day, and it seems like it's recovering. How do people buy stocks now with the crazy multiples based on the stock prices versus the company's earnings?
Well, I think it's very hard. If you are not already in equities, I think it's very difficult to go out and buy them right now. Now, having said that, I don't think people should be sitting 100% in cash either. So I, as I just said, I expect stock prices to come down sometime in the next 3 to 5 months. But, in fairness, I've been saying that for like a year. So, and it hasn't happened. And I'm not completely on the sidelines. As you said, I am a money manager. My clients have owned equities for years. We still own them. We have had hedges on from time to time during that process. It turns out we haven't really needed those hedges over the last couple of years or a year and a half, because equities have, really gone up and to the right for the most part. But for all the reasons you just pointed out, I don't think you can just have all your money in the stock market and not have any money on the sidelines or not have some kind of protection as well. I talk to a lot of people who are just so certain that they know what's going to happen, and they're certain that cash is going to do well, or they're certain that gold's going to do well, or that Bitcoin's going to do well. And I'll tell you, I've been doing this for 25 years now, and it's the most uncertain time I've ever experienced. So, I don't think anybody should be all in on any one thing.
How much do you think the government, with the emergency funding program, the bank funding program that they, quickly put into place after Silicon Valley Bank and other banks collapsed in 23, they're saying that will sunset in next month. How much do you think that liquidity pumping into the banking market has played a role in the stock market doing so well?
Well, I mean, there's no question it's played a big role. I mean, that without that bank term funding program, then many more banks would have gone bankrupt. So, and when a bank goes bankrupt, then money disappears. And when money disappears, liquidity disappears. And when liquidity disappears, asset prices come down. So the fact that that didn't happen has, without question, contributed to the continued rise in the stock market.
You think they'll sunset it?
I think they'll try, and perhaps it'll work for a while. But here's the thing with all these programs: if people that are upset with these programs, I completely get it. I wish these programs didn't exist. I wish that we had a free market where market forces were allowed to determine market prices. But that's just not the world we live in, and it doesn't do me any good to continually wish for these things, because I have to deal with the real world. And what I mean by that is, if they let this thing sunset, well, they've still got the discount window that they can use. And if the discount window doesn't use, then they'll open another program and they'll call it something else, and it'll sound very altruistic, and they'll say it's for your own good. But this is the reason that central banks exist in the first place. So if you don't like central banks, then I kind of understand why you don't like these programs. Because anything a central bank does is going to kind of be against what you believe should be done. And like I said, I come from a world where I wish market forces were allowed to determine prices, but that it's just not reality. And unfortunately, I don't think it's going to be reality for several years.
Well, let's talk about the dollar. I know your stance based on our last conversation and hearing you on other podcasts and talking about, the faith that you have, or at least temporarily, for who knows how long, you still believe that our fiat currency, the dollar, is the best in the world. I recently watched a podcast with Adam Taggart, was the moderator. You and I spoke a little bit before we got started here about the dollar collapse, and you were sitting on two different couches, sort of like the one side, the dollar's definitely collapsing, and then your side where you're saying that's preposterous, essentially. I mean, show me how that will happen. And now, at least, or by 2030, I think Jim Rickards was saying. And by the way, you kept your cool. It was good to see that you maintained your composure, despite him not answering your questions and honestly taking a couple shots at you, Brent. Were you mad at? I mean, I'm just curious. I mean, were you mad at him during this?
No, I don't. I don't get mad. I was a little frustrated that I couldn't get him to answer the question. But, when you have somebody cornered and they just refuse to answer the question, there's not much you can do. But I had him in a position where he knew the answer, but he wouldn't say it out loud. And if he didn't know the answer, if he really didn't know the answer, then shame on him for not knowing the answer. Yeah,
well, that's certainly for those listening. You can search for that interview. It's a long one, but it was a live show too, where people get they ask questions. It's a great show. But tell us why that you believe that the dollar is still the best fiat currency in the world, and why is it that you have sort of like this belief in it? Because a lot of people, I mean, and people that we know together, right? I mean, Peter Schiff, Michael Maloney. I mean, so many people, Jim Rickards. I mean, they believe that it's going to crash and that we should be running out and buying gold. But why is it that you believe that it will stay strong and get stronger?
Well, there's several reasons. And, I'll say up front, especially for people who have never heard me talk before. People have heard me talk before. I've heard me say this several times. And it's not that I think this is the way it should be. It's not the system that I would personally design myself. But, I feel like I have a pretty good understanding of the way that it actually is. And I think a lot of people who think that the dollar is under this imminent, risk of demise are focused solely on the United States. And when you do an analysis of the finances of the United States, the only conclusion that you can come to is that we are in a lot of trouble and things are going to go really bad. And as a result, the dollar's they're going to have to, do a bunch of bailouts. They're going to have to print a bunch of money, and that's going to cause the US dollar to get inflated away. And so when you do that analysis on the United States, it's not that is necessarily incorrect. That's actually a fairly, I would say, a good conclusion to come to. But the problem is that analyzing the United States in isolation doesn't do you any good, because it's not an isolated world. And the fact is that the rest of the world uses dollars. And there's a bigger market for dollars outside the United States than there is inside the United States. And that leads to an incredible amount of demand for US dollars. And that is what has allowed the United States to get away with profligate policy that would have sent many other countries or many other currencies, kind of into the toilet, so to speak. It's this euro dollar market. And this, for those who weren't familiar with the euro dollar market, I'm not talking about the euro currency. There's a market for dollars, US dollars, that exists outside the United States. And so dollar denominated transactions, dollar denominated loans, dollar denominated balances sitting outside the domestic United States is part of this euro dollar system. And there is an incredible amount of demand. And many people know that the United States has borrowed like 33 or 34, 35 trillion dollars. And that's a huge number. And again, they will use this as evidence of why the US is in trouble. But the rest of the world owes even more dollars than the US does. And they don't owe it to the United States, they owe it to each other. So one person's liability is somebody else's assets. So the difference between the United States and the rest of the world, though, is the rest of the world cannot create dollars out of thin air the same way that the United States can. So when they get in a tough spot, the U.S. can set up these bank term funding programs. So they can they can do bailouts, they can increase the money supply, the dollar supply. The rest of the world doesn't have that option because they can't create dollars. The only way that the rest of the world can create dollars is by extending new loans, which puts their own capital at risk. There's not a central bank out there that can create new US dollar collateral. And as a result, when the dollar goes higher, it makes it really hard for the rest of the world to pay off their US dollar balances. Think of it, as interest rates have gone up in the United States, that has made it harder for homeowners or borrowers or credit card, people with credit balances on credit cards. It's made it harder for them to service that debt. That same issue exists outside the United States, but on a much bigger scale than currently exists inside the United States. That creates demand for dollars. And
so when we,
go
ahead. I'm sorry.
No, I was just going to say, so some people will then say, well, what if the rest of the world just defaults on these loans and starts using a different currency? Okay, so if they default on those loans, again, they don't owe those dollars to the United States. They owe those to each other. And it's 30, 40, 50 trillion dollars. So if they default, they're not just losing 30, 40, 50 trillion in debt. They're losing 30, 40, 50 trillion in assets. Now, I don't know anybody that can withstand $50 trillion leaving their balance sheet and assets and still perform well. And the other thing is, let's say that they decided to do this anyway. Let's say they decided to take the pain, they're going to default on all this US dollar debt, and they're going to then use a different currency. Well, if they were to do that, do you think the United States would still allow those countries and those corporations outside the United States to sell their goods into the United States in something other than dollars? Of course they wouldn't. And so not only would they lose their 30, 40, 50 trillion in assets, they would now have to trade all amongst themselves and would not have access to the biggest consumer market in the world. So these are just a couple reasons why it's very easy to say that we're going to de-dollarize. It's extremely hard to actually do it.
So what you're referring to is like the BRICS. So everybody talks about that, right, as being, they're giving up the dollar currency, doing business with the dollar. You don't think that that's a threat?
Well, it's not that it's not a threat, and it's not that it should be ignored. But just because the president of India and the president of Brazil get up on stage and say we are committed towards a new currency and a new trading bloc doesn't mean it's actually going to happen. When Joe Biden gets up on stage, nobody believes him anymore. When Trump gets up on stage, a lot of times people don't believe him. But as soon as a foreign politician says something, wow, it's absolutely 100% going to happen. So I would encourage people to take foreign politicians' comments about as seriously as they take U.S. politicians seriously, because again, in the U.S., people will say the U.S. politicians won't accept any pain. They will do these bailouts, right? But then they say these external politicians, they are going to accept the pain. They're not going to do bailouts because that's what it would take to de-dollarize. And I'm saying these politicians outside the United States are no different. They don't want to accept the pain of deleveraging, of losing assets, of their currency falling. And so the pain of defaults. And so they won't do it either. And that's what it would take to de-dollarize. And so I think a lot of times people get in a habit of being very critical of the United States, but then be very forgiving for the sins of other countries who are basically in the same or worse shape than the United States.
They want our dollars. They want us to continue to buy their products.
Yep.
I hear debates all the time saying, talking about the dollar crashing and that if you're not investing in physical gold and silver, then you're dead. And, others say if you have gold and silver and the dollar crashes, you may really be dead because everyone will be coming to rob you. Sometimes, Brent, I hear this talk and I mean, it makes me feel crazy. You think about, the dollar, one aspect, geez, the dollar might collapse, but then when I look at one of the biggest concerns, I mean, you mentioned it about, when the politicians stand up, I look at this clown show running the country and I think, man, I don't know, maybe they will really, we're 248 years old, the United States of America. You look at countries like, Egypt's 8,000 years old, and I think how a lot of the other countries think that we're so pompous and that we're, we're infallible, right? And it's just, I don't think I need to clarify what I mean by clown show, but from your perspective, in our last conversation, you spoke about the debt crisis, and I said to you, Brent, how bad is it? And you said, and I think this is a pretty good quote. You said it's pretty bad. I mean, should we be concerned and buy gold? I mean, I hear what you're saying about the dollar, but do you think that we still should be hedging the dollar with buying physical gold?
So the short answer is yes. I'm a big believer in gold. I think everybody should own gold. To me, it should be kind of the cornerstone or the foundation upon which all portfolios are built. Now, that doesn't mean, and I want to make sure people get this, like, I don't think you should go all in on gold. I don't think you should sell everything you own, buy gold, move to a mountaintop, and come back in 10 years. I don't think that's the way to go about it. But you should absolutely own gold. I actually believe that in the years ahead, we are going to see gold and the U.S. dollar rise together versus all other fiat currencies. And so, just because I'm bullish on the U.S. dollar versus other currencies, it doesn't mean I'm bearish on gold. And the other thing is with gold, I don't buy it expecting it to pay off tomorrow. To me, gold is an insurance policy. It's not, something that I look to get rich on. It would be something that I would look to preserve my wealth on. If we live in a world where gold has gone to $5,000 or $10,000 or whatever your target price is, this is not a world where you're now flying around in a private jet and staying at five-star hotels. You may have protected your way of life while everybody else's fell, but this is not going to be a situation where you have done spectacularly well, everybody else is doing okay, and it's kind of the same type of an environment we're in now, except for you're the one with all the money, and the people who were formerly hanging out at the Four Seasons are now at Holiday Inn. So that's my view on gold. And the other thing I want to say is, a lot of times when I will talk about where I think the U.S. is headed in the years ahead, and how I think it's going to outperform the rest of the world, I will get labeled an American exceptionalist. I've been labeled a jingoist because I think the U.S. still has the strongest military. And I want to be clear: this is not my viewpoint, and it's not that we won't get hit. It's not that we won't get hurt. I actually think we're going to get hit pretty hard. I just think that we're going to handle it better than much of the rest of the world, for many reasons that are kind of built into the design of the system. And some of these advantages that the U.S. has are deserved, and some of them are undeserved. But regardless of whether they're deserved or not, they exist, and I think that will allow the U.S. to weather the storm a little better. One of the examples I have used recently is I grew up in the 80s and I'm a child of the 80s and I love anything, music, films, books, anything that came out in the 80s. I'm kind of a buff on that. And so when I was probably 13 or 14, 15 years old, there was a boxing match between Marvin Hagler and Thomas Hearns. And if anybody has never seen this boxing match, I would encourage you to go on YouTube and watch it because it's better than any Rocky movie. And these were like the two top fighters of the day. And in the very first round, Thomas Hearns hit Hagler so hard and got him such a good shot that it opened up a huge cut above his eye. And they almost had to stop the fight. But I think they made it. I think that was the first round. And then in between rounds, his camp and his corner got the bleeding to stop. And then in the next two rounds, Hagler did better. And in the third round, Hagler won. And that's kind of how I kind of see potentially it going with the United States. I'm not expecting us not to get hit. I think we probably will get hit. I think we'll probably bleed a little bit. But I think if it really comes down to it, then I think the U.S. can throw a few punches of its own and probably knock a lot of people out. And so, again, this is not what I want to see happen. It's just, as an analyst, that's how I see it playing out. So I don't think people should come away from this and say, no, the U.S. is fine. Brent says the dollar's fine. The U.S. economy is fine. That's not the case at all. It's just that when you look at Europe, they are in a lot of trouble as well. When you look at Japan, they have a lot of challenges as well. China is currently going through, a real estate crisis. Their stock market has crashed. Their currency's fallen 15%. They've had to drop interest rates to try to, prop up their market. I mean, all of the things that people are worried about one day happening to the United States are happening right now today in China. And so when you look around, where would you rather put your money? I mean, if you would rather put your money in China than the United States, it's your money. You're welcome to it. But I don't think that's a good bet. If you'd rather put your money in Germany than the United States, I don't think that's a good bet. I don't think I'd put my money in Russia rather than the United States. And when you start kind of doing your analysis and you realize even though the U.S. has these negative characteristics currently, so does everybody else. And on a relative basis, global capital will go where it is treated best. Doesn't have to be treated good, just has to be treated the best. And as individuals, we kind of have the opportunity to kind of check out. We could sell everything. We could go buy gold and just sit on the sidelines for 5 or 10 years and see what happens. But big global corporations, big actors on the global stage don't have the option of selling everything and going and sitting on the sidelines for a number of reasons. And again, you may not like that, but that's the truth. And so this global capital, global asset allocators are going to put their money somewhere. They're not just going to leave it in cash. And when they start doing this analysis, it's my belief that they will continue to allocate it to the. And I should say that this has been happening. This isn't new. The U.S. has outperformed the rest of the world on a number of different economic variables for several years, and I expect that to continue.
What does it look like? You're talking about the boxing match. I mean, what does it look like for the average American, average working class American, everyday American? What does it look like to be punched in the face? I mean, what will that look like? For us?
Well, so here's the thing: is I don't think there's a uniform answer to this because I think it's going to depend, and I'll tell you what I mean by that. Is we are obviously currently living in a higher inflationary environment than many of us have ever experienced, at least since the 1970s. Now, inflation has stopped rising as fast as it was, and you could argue that it's coming down. And you could argue that inflation is going to crash and we could go back into a deflationary environment. What I think will happen, and I should say, I used to think that this answer was a total cop-out. When I would hear people talk about stagflation, I would say, well, they just don't have the guts to make a call one way or the other, so they stay stagflation, and that covers everything. But I actually think that that's kind of what we're going to see. I think some things are going to fall in price, but I think other things, prices will stay high either because of supply chain issues or, political issues or, just supply demand dynamics. And so I think sometimes the punch in the mouth is going to be that our cost of living isn't going to crash, right? And our cost of living will probably stay high and it'll probably go higher. So for many people, that's a punch in the face. But I think other things, as a result of what's going on, I think some things are going to go bankrupt. Some things are going to fall, and when that happens, then you lose your job. So, and that's deflationary. When you don't have any money, that's deflationary. or if we get in another one of these banking system collapses, like the bank term funding program that you talked about, or if we get into a COVID situation where, money's disappearing and asset prices are falling, people are losing their jobs. That's a deflationary punch in the face. And what I think is likely going to happen is there's going to be a little bit of both of these all over the place. I think some things are going to do well, some things are not going to do well, and it could be different from region to region or from industry to industry. But I just think it's going to be a lot more challenging. I think the next 10 years will be a lot more challenging than the last 10 years, and and this is why I don't think people should be all in on gold for the inflation or all in on Bitcoin for the, fall of the monetary system, or all in on farmland because they think food prices are going high. I really think diversification is important. And I think having some cash on the sidelines, even though we're in an inflationary environment, is a good idea. And when I say this, people will say, yeah, but I'm losing money on my cash. The rate of inflation is higher than cash. Even though I'm now getting 3, 4, 5% on my cash, the inflation rate is higher. And that is true. But if we get into one of these crashes, then you can go buy stuff at a much lower price and you will have cash to do it. If you're all in and we get one of these, deflationary drawdowns, you don't have any cash to go in and buy those things cheaper. The other thing is if you don't have any cash on the sideline, or if you don't have any dry powder or some kind of a nest egg, however you want to describe that, if and when one of these crises hit, you're going to be stressed because you're not going to have any dry powder. And if you're stressed, you are going to probably not going to make a great decision. Whereas if you have the cash on the sideline and you have this excess liquidity kind of saved up for a rainy day, you are going to be less stressed than everybody else around you, and the likelihood that you make a better decision than them has increased. And to me, that's worth losing a little money to inflation on this nest egg that you have on the side.
Yeah, you can make it up on the opportunity right. side. When we talk about and you just brought up something that's really important, because this is a big concern for me in the housing market. And, obviously we can't cover everything in this meeting together, but you talk about, and this is worth watching our prior podcast with Brent. You can search for it. We'll actually drop it in the link in the show notes. But Brent talks about, no reverse gear, how we are set up. Our monetary system is based on, constantly moving and growing and growing and growing, not having deflationary times. One of the things that concerns me is you just spoke about it. We can control, with being a global economy right now. I mean, the powers to be could basically control supply chain. I mean, they could regulate that. They could pump the brakes on it, and we're screwed. Prices are never going to go down because we'll never have an abundance if they choose to do so. We see it in the real estate industry. There are regulations that prevent. I mean, it would be an easy switch. You go, okay, well, we have a housing crisis. Well, let's just back off regulations like they did after World War II and allow builders and developers, incentivize them to build affordable housing and tear down some of those trees that everybody's hugging on to. We have plenty of green space, but they won't do it because they want to keep the finite supply going, because if they oversupply it, then we go into reverse gear like you speak about. I mean, am I right in the assessment of this? I mean, don't we live in the powers to be to where we are? I mean, we look at the farmland; they're controlling our food. I mean, I don't want to be, talk about conspiracy theories, but I mean, isn't what I'm talking about here the facts?
Well, I would say in general, over the last, call it 20 years, we have been moving from being more free to being less free, and to having, where we used to have more free markets, now we have less free markets. And so whether it's the politicians or the monetary authorities or, the powers that be are kind of instituting more centralized control than what we had kind of when I was growing up. And so I don't think you're wrong in that aspect. And there's always unintended consequences when they do these. And some of them or the unintended consequences are typically not good. Because again, these are not business people making these decisions. These are typically academics, politicians, glass in the sky type people, as opposed to real world operators. And that's why typically free markets get figured out quicker and better, because they don't have these roadblocks put up by somebody who doesn't know what they're talking about. So I think that is definitely an issue. And this kind of goes back to the US versus the rest of the world. The rest of the world's politicians are the same. Again, I don't think we're going to get in a situation where our politicians make all these really stupid mistakes and the rest of the world politicians are all these geniuses who get everything right. So I think all of these roadblocks, all of these controls that are being put in place, they're being put in place all over the world, not just in the United States. And I think these unintended consequences have the potential to hurt Europe and Japan and China and Russia and all these other places just as much as they hurt the US. And so, I think right now markets are very much kind of priced to perfection, but we live in just such an imperfect world that I expect there to be some of these unintended consequences that kind of come out of nowhere. And that's why I'm invested, but I'm very cautious. I don't know if I'd say I'm worried, because I don't lose sleep over this, but I'm definitely concerned about, where we're headed and the direction that things are going. And so, that's why I do a lot of these podcasts, and it's why I, go to conferences. Is I try to explain the system as it is, and I think this kind of started off with you talking about how the system has to grow, and that is true. So let me address that really quick, and I'm going to try to do it in a very simplified manner. But I several years ago, probably 2018, when I first started talking about my kind of dollar milkshake theory, I said that I thought in the years ahead, the dollar would rise versus other currencies, that sovereign bonds would get sold because people would start to lose faith in governments, and we would see U.S. equities, gold, and the dollar all rise together. And that's largely what has happened. But I said it would also be punctuated by terrifying drawdowns along the way. Now, the reason I put that asterisk on there, be punctuated by terrifying drawdowns along the way, is because of the design of the system. So the design of this, and when I say the system, I'm talking about the monetary system. The monetary system is a debt-based monetary system, which means new money gets created by loaning it into existence. And because there's interest attached to loans, there is never enough money to pay off all the debt. So you have a system where it must continually grow. If it doesn't grow, then it starts to contract. And once it starts to contract and interest doesn't get paid, or loans don't get paid and they get defaulted on, then all of a sudden you get a credit contraction. And in these credit contractions, money disappears. So while it's an inherently inflationary system in that it always has to grow, and governments will always come in after some kind of a crisis and increase the monetary base or do stimulus or do bailouts, from that perspective, it's inflationary. So that's part of the reason when you look at a chart of assets, whether it's commodities or gold or stocks or real estate, assets prices tend to go up and to the right over long periods of time. Part of the reason is because of this debt-based monetary system, and fiat currency loses value. But the reason you also every now and then have these deflationary shocks is because sometimes the system stops expanding. And when the system stops expanding, it typically contracts. And when it contracts, it typically contracts very quickly and very fast. And that's where you get these deflationary shocks to the downside. So it's important to understand how the system works and how the system is designed. Governments are going to do everything they can to keep the system expanding, because in their mind, the alternative is unacceptable. But just because they try to keep it expanding doesn't mean it won't contract from time to time anyway. And so this is why I don't think you can just sit 100% in the inflationary camp. I don't think you can sit 100% in the deflationary camp. I think you kind of have to understand what could cause each of those to happen and have a plan for each of those scenarios, because I don't know for sure which one is going to happen, but I know the system is exposed to both of them.
Well, how does that work with the debt? I mean, I understand the concept and the system that was created, and I agree with you. I don't like the system. I think that we're getting away from free markets, and freedom, which our forefathers founded.
Right.
our great country on. They're even talking about getting rid of the Constitution. People are saying that the states, certain people are saying that the states should be state to state, that have their own Constitution. But how does it work? And we got a little taste of it with the pandemic, where they just handed out a bunch of money and fattened the accounts of the businesses that in a lot of cases they fraudulently took this money. I think the government knows that. When does it catch up? I mean, when we look at consumers not being able to, this is happening quickly, Brent. I think it's gotten a lot worse than you and I spoke last 4 or 5 months ago. You look at credit card debt is peaking out. Now they're coming out saying that there's a large percentage of these people, they know because the credit reporting agencies are the ones that are providing the data. People aren't paying off their credit cards every month like they said in mainstream media last year, that they were just utilizing it for their points. People are struggling. They're financing their groceries and their automobile fuel that they put in to even get back and forth to where they need to go. Where does it catch up? We have student debt that's out of control. We have now, and Fannie Mae, I don't know how well you follow this, but ever since the great financial crisis, we've been selling defaulting loans, and Fannie Mae, the one that buys all of these residential mortgages so that the banks can free up more money and keep lending, they're now selling these loans and have been they're putting them out to bid. Big publicly traded companies are buying them up. PIMCO is one of them. I could go on, but they're buying them to what brokers like myself, real estate brokers, value. It's called a broker price opinion. You value what the real estate's worth, not what the unpaid balance on the mortgage is worth, but what's the asset worth. And these companies are now buying these non-performing loans or reperforming loans. They were in default, and for whatever reason, for modifications, they're performing now, but they're bundling these up and selling them off. And these Wall Street companies are buying them for, let's say, 35 cents to 50 cents on the dollar compared to what the broker price opinions are, is what the real estate's worth. So we know that if it hadn't been for modifications, if it hadn't been for bailouts, the government's kind of has themselves in a spot, because don't they need to continue the bailouts? With the debt crisis that we have, and with what you're saying, prices higher for longer, and some of that will be controlled by the government or the powers to be, the deep state or whatever you want to call it. Where does it eventually implode from a consumer bankruptcy standpoint, and how do we get out of that?
Well, it's going to kind of depend on. So here's an important thing to understand. I'm going to try to explain this this is not simple stuff. So I always try to explain it in a simple way, but I just want to say up front, it's not simple stuff. So if people are listening and they're not quite understanding, don't feel bad. I've been doing this for 25 years and I still don't understand it perfectly. But let me try to explain this in a way that I think helps. So the reason we kind of haven't hit the wall yet is because even though we have all these issues you've pointed out, money is still circulating. The reason money is still circulating is because balances on credit cards are going higher. In other words, if credit card balances were coming down because people were not spending, then there would be no velocity of money, right? But as of right now, people they still have money from PPP loans, or they still have money from the stimulus programs, or they have extra money because their rent has been in forbearance, or whatever it is. And so the government has put these programs in place to allow people to continue spending money. If and when they can no longer do that, then there won't be velocity. And then that's when we get the reverse gear, and that's when we get the credit contraction. I think part of the reason that this has gone on longer than many have expected is because I think a large percent of the people who owe the credit card balances are kind of the lower half of the society, for lack of a better way of saying it. And higher rates hurt them because they have the debts and they have the credit card balances. But on the top end of the economy, that is the environment, that's the part of society that has assets. That's part of and the higher interest rates on treasury bonds and fixed income instruments has been paying those people. So the people that are wealthy enough to have assets have been getting more money because of higher rates. And the people who have less money have been getting less money because a higher percent of their income has gone to service these debts. But it's the growth in asset prices that has allowed this to go on. But there will come a point, and that's the $1,000,000 question: is at what point do you get a credit contraction? At what point do you hit the wall and get a credit contraction? So that's the first question. And then the second question is, what does the government do in response? So let's use last year's bank term funding program as an example. It was almost exactly a year ago where this started happening. And when that happens, now these banks basically had a hole on their balance sheet. People wanted their money. They couldn't liquidate their bonds at a price that allowed them to pay everybody back. So there's a hole in the banking system. Now, let's just, as an example, let's say that hole was $100 billion. I'm just going to make up a number just to keep it simple. Now, if the government comes out and says, okay, you know what, we're going to provide $75 billion of financing or bailouts or whatever it is, well, there's still a $25 billion hole. And so things could continue to get worse. But if the government comes out and says, you know what, we're going to provide $150 billion, not only have they filled the hole, but they've created an additional $50 billion on top of it. So you really kind of, and the thing is, and then maybe after that, maybe they find out, you know what, maybe 100 billion, maybe the hole's actually bigger than 100 billion. Maybe it's actually 250 billion. So that 150 is not enough. And then they have to do another 100. But the point is when credit stops moving, when credit stops getting extended, and when money stops getting spent and circulation stops, there will be a hole as a result. And the question is, how big is the hole, and what can the government do to fill the hole, and not only fill the hole, but also convince consumers, business owners, corporate executives to start the process again and get money circulating again. And a lot of times it kind of goes back to, I don't know if you remember in the global financial crisis when, Henry Paulson asked for like $700 or $800 billion for TARP. And the Congress was like, that's a crazy amount of money. And he says, yeah, but if I have a bazooka, then I don't have to use it. And the idea is that you want the central banks, the governments, they want to come out and they want to show that they are in control and that they will do whatever it takes because they want to get confidence back into the market. Now, sometimes all they have to do is the president comes out and says something and that restores confidence. Sometimes they have to do a huge bailout. Sometimes they have to do, QE or whatever it is. But at the end of the day, the governments are going to do whatever they have to do to restore confidence. And whether that takes the place, whether that's done by new laws, whether it's done by bailouts, whether it's done by QE, they have to do something to fill that hole and get money circulating again.
I think also what they meant with TARP is to prevent banks from collapsing or being, getting to the point that, I think that, like you said, they put these things in place, but they're imperfect. So is it a fair assessment then if I'm understanding what you're saying, is it fair to say that from a government standpoint, if we're looking at the debt or the defaulting debt, the ones that are defaulting, as long as they can keep that a smaller percentage than the ones that can continue, they may not be happy about paying their bills because they don't have a whole lot left over. But as long as they can keep enough of the money in circulation to where the debt is still expanding, and that the ones that can't pay their bills are the smaller of the pie, then that allows it to continue or to kick the can down the road. Is that fair?
Yeah, I think that's the right way to say it. You can think about it like even when there's a bull market, even in good times, there's still businesses that don't make it for whatever reason. There are still loans that get defaulted on. But if new loans are being created at a faster rate than old ones are being defaulted on, then in general, you have a credit expansion. And as long as credit is expanding, then the system can go on. It's when the system as a whole no longer has credit expansion that things go sideways.
So then how will we compare that to, the talk of inflation? One, CPI. I don't think that we can trust that number. I don't even like the way that they create it. The sampling of it, maybe you can explain that a little bit. But with what you're saying, it's almost like this is a game of cat and mouse, because
it is a game. It is a game. Yeah.
So really the interest rate, I mean, they're going to cut rates, but not that would even matter. I mean, it's not going to prevent them from continuing, the expansion. They're going to create a way for the expansion, but they're manipulating the markets now. Talk about the CPI for a minute. Does inflation play a real role in the Fed's decision, or is this, just also part of the game?
Well, it's a little bit of both. So the first thing to understand is the reason that central banks, and I'm just going to use the Fed here, but all central banks do this. The reason that the Fed has a 2% inflation target is because the system is inflationary. They need the system to expand, and as the system expands, prices typically rise. Okay, so that is why they have a 2% stated goal. If they had a negative 2% stated goal, that would be deflationary, and then and the system does not work in a continuously deflationary environment. Now, the other thing that they will come out and say they want to get inflation back down to 2%. Well, part of the reason that inflation helps governments and central banks is it makes the debt easier to pay off, right? $1 million in 1975 is dramatically different than $1 million in 2024. So if you had $1 million house in 1975, it would be much bigger and nicer than the $1 million house today, and that's inflation, right? That's part as a result of inflation. Now going forward, the governments want inflation because they need to inflate away some of this debt. So in the same way that $1 million was a lot more in 1970 than it is today, $30 trillion in debt today would be a lot less in 2060, right? So 25, 35 years from now, 30 trillion might not seem that much if we get there. But so that is part of the reason that they want inflation. But the reason that it's important, and while they want inflation, so think of it this way: I think if they could get 4% inflation for 10 years, they would love it, because 4% inflation, it's high enough that it's annoying, but it's not so high that everybody's revolting and in the streets with pitchforks, right? But when it's 8, 9, 10, 12, 13, 14, 20%, that's politically unacceptable. That's when the populace starts pushing back and starts revolting. So governments don't want 10 to 20% inflation, but I think if they could get 3 to 4% inflation while saying they want to, I think they would love that. Because if you have, let's say you have 4% inflation for the next 10 years, that eats away 40% of the debt. And it allows this system to keep going, right? Allows them to keep playing.
Makes sense.
So I do think that they want inflation down and under control. I don't think they want it at zero, right? And so, but again, just because they want something to happen doesn't mean they're going to. And a lot of times what happens is, because, again, I don't think central bankers are stupid. I think they're arrogant. I think they're overconfident. And I think they're not as capable as they think they are, but they're not stupid. So a lot of times what happens is the unintended consequences is, the things that they are doing to slow inflation may end up pushing us back into deflation. So, and then we could get one of these deflationary shocks. And then they have to go back and they have to start, pumping, doing bailouts and trying to inflate again. And the idea that they can get 3 or 4% inflation kind of consistently for 10 years, I think that's an extremely unlikely phenomenon. So instead, I think that we're probably going to swing back and forth between the two. And this is, again, why I say, even though we're in an inflationary environment, it could very quickly go to a deflationary environment very quickly. And that's what they're trying to stick this beautiful deleveraging or stick this soft landing, right? And I can't say for sure that they can't do it, but I wouldn't bet everything that they can.
Let's talk about war.
Yeah.
I've heard throughout my entire life from, some some pretty smart people that they have made statements that America needs war for growth and to survive, that we survive or we thrive in war. Is that true? And if that's the case, why? And do you think no one's really, I think that there's a lot going on right now that we're not really talking about. I mean, if you had to give an opinion on that, just tell me what your thoughts on.
So regarding does there have to be war? Unfortunately, there doesn't have to be, but there is. I guess, it doesn't have to be this way, but it is this way. The U.S. has basically been at war since World War II. Maybe there's been 10 years of total non-war out of the last 60 or 70. We always have some skirmish going on somewhere. But this is the role of the global hegemon. And people say, well, it doesn't have to be that way. And again, I agree with you. It doesn't have to be that way, but it is. And we're just like every other hegemon or empire in history. We have outposts all over the world, and we seek to control, the trade routes all over the world. And when people get out of line and don't do what we want to do, then we use various forms of persuasion to try to bring them back into line, right? So this is kind of the way the world works. And as far as the U.S., I still think that the U.S. has the strongest military in the world. I think if it really came down to it and we had to fight a war, that we could win that war. I pray to God that doesn't happen. I have a 15-year-old son, and I certainly don't want him off on some other part of the world taking a shot at somebody he's never met. And I don't want anybody shooting at him either. But I think, we're at this period in history where we're kind of in this Game of Thrones where everybody's trying to put themselves forward, and there's people challenging the hegemon, and the hegemon doesn't want to give it up. It's like king on the mountain, right? The U.S. is not going to surrender, its place in the world peacefully. It's just not going to do that. And other countries around the world are not just going to peacefully do whatever the U.S. tells them to do. And so, unfortunately, I think that leads to conflict. And the other thing is that historically, politicians have always used war as a way to try and solve their domestic problems or to blame their domestic problems on an external force. And I think that applies to the United States. I think it applies to Russia. I think it applies to China and Japan and everywhere. Germany, South Africa. India. All of these countries that are not in fantastic shape, their politicians are going to blame somebody else. No politician is ever going to take responsibility. So the easiest thing to do is to blame somebody else, right? And when you start blaming somebody else, then eventually, and then the other thing is, when people say the U.S. has not won a war in 60 or 70 years, that's sort of true. And I'm not going to say that we've performed stellarly, but was that really the goal, right? Think about how much money was made over the last 20 years in Afghanistan from 2001 to 2020. Just go look at the balance sheets and the profit statements of all the military industrial complex suppliers. They all did really well for those 20 years. So, people hate it when I say that, but that's true. And not only that, but then the banks had to loan them money. That extended credit. It kept money flowing. It's all part of it. Like, we do have a militarized economy. Now, it's not completely militarized, and some countries are more of a militarized economy than ours, but on a large basis, it's a militarized economy. And I unfortunately don't think that's going to change in the next few years.
Do you think we'll end up in some type of major conflict? When you look at Russia and China and Iran and what's happening, do you think that we will see something? A lot of people, and I'm not trying to feed into this conspiracy, but a lot of people think that something's going to happen to delay the election or to not have an election.
Well, I think unfortunately we are headed towards more military conflict, not less. Again, I am the first person to say that I will love to be wrong on that. So if 2 or 3 years from now we haven't had any more things and people come out and say Brent was an idiot, he was totally wrong, I will happily raise my hand and say, you're right, I was wrong. Regarding this year's election, I've been saying this for a while. To me, it doesn't matter who wins because the other side is not going to accept it. No matter who wins, the other side will not accept it under any circumstances. And so I think that is very troubling. That is very troubling. And I'm not sure how we get through that. without significant pain. So again, happy to be wrong. Would love to be wrong on this. If 9 months from now we're sitting here saying, wow, I got that one completely wrong, I'll be a happy guy. But I think that's unlikely.
We'll kind of end with this one. Obviously, I don't. Do you know Tucker Carlson?
I don't know him personally. I mean, I know who he is.
So, I mean, you of course know that he went to Russia and interviewed Putin, and yep. I think everybody knows. I mean, you're probably hiding under a rock, or you're completely disconnected. If, of course, I don't know that mainstream media is spread it around too much. I think they're trying to. Certainly, the government knows, the CIA knows, the FBI knows. I mean, there's a lot of interested people in that. What really is happening. What is your take on that? I mean, from a journalist, and not saying that you're a journalist, but from a journalist like Tucker Carlson going to Russia and sitting down with Putin, any take on that?
Well, so I kind of come at this from a couple different angles. So first of all, I believe in free speech, and the idea that Americans should not be able to hear what somebody on the other side of the world is saying, I think is ridiculous. The idea that we could be in a military conflict with Russia of some kind, but would not be allowed to hear what they're saying, I think is wrong. And I think that kind of goes against what America's all about. And I think that it was much ado about nothing in many ways. I mean, people were very upset that he was going to go and that we shouldn't be able to hear, and it was all going to be propaganda. And here's the thing. Whether it's propaganda or whether it's truth, as Americans, we are supposed to be able to determine that for ourselves. We are not supposed to have someone tell us whether it's propaganda or not. And we are not supposed to just have to be, the Constitution was set up to tell the government what it could do, not tell the citizens what they could do, right? So I thought all the pushback against it was a bit ridiculous. I also think the idea that he was going to go over there and ask only tough questions was, of course, that's not going to happen. Of course, Putin is going to make himself look good. But I thought he actually did ask some tough questions. I don't think he just totally let Putin off the hook. But there was a couple things where I thought that Tucker was kind of wrong as well. Is when Tucker. He said he went to Moscow and it's the most beautiful city and it's better than New York and all these things. And okay, maybe that's sort of true right now. But the reality is money gets siphoned from all over the country in Russia to go to subsidize Moscow, right? If he would have gone 150 miles outside of Moscow to a town of 20,000, I wonder if he would have had the same comments. So some of that stuff, I think, was a little bit more for entertainment value than it was for actual news value. But, the idea that we should not talk to Russia or China or whoever it is to me, it's ridiculous. I mean, it's when you stop talking that you start fighting, right? And I don't want to fight. I don't want us to end up in war. And so I think the more that you can talk, even if the other guy's completely wrong, if you let him vent and get it out of his system, maybe that calms things down a little bit.
Well, it's always a pleasure talking with you, Brent, and great advice, and I value your opinion on all these issues that we're talking about today, and can't wait to do it again sometime soon.
Well, thanks for having me on, and good luck to you and all your listeners.
All right, we'll talk soon. Thanks so much. So what'd you think of the interview of Brent Johnson? Did you believe what he has to say? Do you think that you should be owning silver or gold? Do you believe that the U.S. dollar is headed for collapse? Drop your comments below. I'd love to see them. And if you like the video, you can let Brent and I know that you did by smashing that thumbs up. And as I say, if you haven't subscribed to our channel, please consider doing so now. Hit the alert bell. You'll know every time we upload content just like this. And next week we have another special guest. So stay tuned and see you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.